How financially analyzing a property will save you fear, anger, and emotional stress. Hello again, and welcome to this special pet video series. My name is Nathan Ayotte, the creator of the Pet Tool. I have discovered that there are 4 primary things that strike fear in many property buyers. 1. Loss in property value. 2. Overwhelming maintenance cost. 3. Unable to afford the mortgage payment. And 4. Buyer's remorse. What I'm going to do is introduce you to the full pet version. I will reveal specific features of the pet tool that vastly mitigate the fears, angers, and emotional stress that too many buyers and investors experience unnecessarily. These fears will be resolved through the process of a thorough property evaluation that PET can provide. Okay, with that said, let me jump into the full pet version. Okay, welcome back. What you are looking at right now is the interface of the full pet version. And I'm going to be walking through some of the differences between the limited pet version and the full pet version. Now, I want to direct your eyes down to the bottom of the screen. Again, you'll see a number of colored tabs. Now, there's some here that were not in the limited pet version, and that is the owner occupied and the owner tax bracket tabs, the repair and maintenance cost tab, and the lenders tab. I'll be covering a little bit more detail of those specific tabs in a moment and even on a future video as well. Now, before I do that, I want to actually give you an introduction to the instructions tab, which I've not walked through in the past. Here it is in purple. When you open this one up, you'll see here there's a little introduction to the tool, as well as several tips on the use of an Excel spreadsheet. However, the most important part of this tab is a step-by-step procedure right here. Now, PET is very user-friendly and easy to use, but just in case you do get confused or lost, you can always refer back to this step-by-step procedure to get yourself back on track. Now, I'm going to go ahead and look at the Owner Occupied tab. Now, in the prior videos, I've used the Tenant Occupied tab, and we're going to see some of the differences illuminate here as we go through a case. Now, like I mentioned before, the green cells are the only ones provided for user input. The white cells and some of the multicolored cells are automatically calculated by the tool. Now, I do want to direct your attention to this Hide Notes box up here. If you click Hide Notes No, you will find that there are a number of notes that appear to each cell that appears. Now, this just adds extra clarity and guidance on what should be put into those specific cells. Sometimes it adds extra suggestions and information about making the best wise real estate investment as well. So keep your eyes open for that. But if you do want a crisp look and everything to be cleared out from the interface, just click Hide Notes Yes, and everything disappears. Now, you will sometimes find little red flags in the upper right portion of some cells. If you hover your cursor over one of those cells, you will find that a comment will pop up adding extra clarity and guidance to those specific cells. Okay, let's go ahead and run a case. I want to run here another duplex. Now, remember, this is an owner-occupied case we're going to run here, meaning that it's owner-occupied. One unit of this duplex the owner will live in, while the other unit will be available for tenancy. So for units available for rent, that would actually be 1, not 2. List price, let's say it's a $175,000 property. Now recognize we can input any value that we want right here. The limited pet version does have some boundaries on the values that you can input in some cells, but the full pet version doesn't have any restrictions on the amounts or values that you put into the cells. Okay, the age, let's say, is 6 years old, which we'll see is very important here in a few moments. The area, let's say it's 1,600 square feet, 800 per unit. And let's say the lot area is 8,000. Okay, following the arrow, to the mortgage information, but a lot of these things we don't need to change. However, for the down payment, I will put 10% and the interest at 4.5%. These other values, there's no need for those to be changed. Okay, the cost box. Here we have the closing, which is automatically calculated by the PET tool. However, if you do have, let's say, a good faith estimate from your bank or lender with more specific and accurate closing cost, I would recommend inputting those directly into this cell, and that's why it's highlighted green. Let's say the utility cost is $75 a month. Now we have the repair and maintenance cells to input here. Notice they're in white, which means we don't populate those. However, at this point, you need to go to the repair and maintenance cost tab in red down here. And this is where I'm going to introduce you to this specific tab that's offered with the full PET version. Okay, so when you look at this interface, please don't get overwhelmed, as I know it looks a little busy, but actually it's quite simple. Again, keep your eyes focused on the green cells, as those are the only cells for user input. Now you look on the left, there are several boxes and then a large table here in the center, which I'll cover a little bit on that later. Now, if we focus here on the tenant occupied box, which we don't need to populate because we're not running a tenant occupied case, but here we're running an owner occupied case. Number of units, that will be 2 for the duplex. The repair cost, so notice this is in white, we won't populate that right now. And that'll be automatically calculated by the tool, as you'll see in a moment. And then we have here the maintenance cost. Now the maintenance cost, again, is the amount of money that should be set aside each month to cover maintenance and replacement costs as they crop up during the life of your property. Now this is based on the common appliances and household items that make up the property of interest. And based on the lifespan and the age of a lot of these household items will actually determine what the maintenance costs for your property each and every month. Now that's how it's estimated by this large table right here. And you can actually select the specific items that make up the property you're looking at. Let's say, for example, your roofing, right? You can actually select here in the maintenance cost which roofing you have. It may be clay tile, it might be asphalt, it might be fiberglass, it might be slate. Whichever it is, you can select that, and that will drive the a more accurate estimate of your maintenance cost in the tool. Okay, now at this point, we need to go to the item, repair, and miscellaneous cost box. Here, we actually will populate specific items that need to be replaced or repaired immediately upon purchasing the property. Now, I do have here property inspection and termite inspection already here with a 1. I always highly recommend that a property inspection and termite inspection be completed before you take ownership of the property. This really covers your base and will prevent any surprises later. But if you so choose that you would rather not have one of these inspections conducted, you can simply put 0 and then the tool will not account for that cost. Okay, now we have a washer, dryers. Let's say we need 2 refrigerators. Let's say we need 2 microwaves. Let's say one of the entrance doors is damaged and needs to be replaced, and we have 2 bedroom doors out of the 2 units that need to be replaced. Let's say one window is broken and a toilet needs to be replaced. Let's say that 300 square feet of carpet needs to be changed because it's stained or damaged, which means we need 300 feet of carpet pad. Now, with that, let's just say we do a majority of the work, but we hire someone else and we spend $500 in labor to do some of the work here that will need to be done on the property. Okay. Now at that point, we need to come up here to the age and put in the age of the property, which in this case, it's 6. Now that will automatically run this table and calculate accurately what the maintenance cost is for this specific duplex based on the household items that make up the property. Now, if we go back to the owner-occupied tab, we will see that the maintenance cell here is automatically populated from the repair and maintenance cost tab, which is $154 a month. Now, we see here the total closing, and then we carry on over the finances box. Here we need to populate the purchase price, which is $175,000. The term we'll say is still 30-year term. Property insurance, let's say we're able to find a cheaper price at $40 a month. Okay, now continuing to the income and growth. Let's say the vacancy factor is 0, but let's say we're able to get $850 for that one unit available for rent of our duplex. So we simply put $850 here. Now we come to the savings cell. And this is actually quite interesting, but it's very appropriate to account for your savings when it comes to the finances of this property. Your savings, let's say, is $800. This is the amount of money that you are paying in rent to either a home or an apartment that you have nothing more than receipts to show for every single month. Recognize that you no longer are going to be paying that rent on the acquisition of this property. Instead, it's going to be replaced by a mortgage. But a mortgage is very different than a rental payment because you're able to deduct a portion of that payment. So we need to account for that savings or prior rental cost that you are no longer forking out because of a change in your prior living condition. Okay, now we have here the appreciation percentage, appreciation and equity buildup. Now you can put in your appreciation percentage to see how much it would be that it would appreciate each year, but in all honesty, I do not account for the appreciation in the finances because I want to look at the most pessimistic case when looking at the property. So I actually assume as if the property doesn't appreciate at all. It remains the same throughout from one year to the next, and gives you the more pessimistic and most conservative financial estimate when looking at the property. Okay, now carrying on into the tax advantages. We see here the time, which is simply the amount of time we want to account for the taxes, which I want to do it for a full year, so it's 12 months. Then we look at the tax rate. Now, at this point, let's go to the owner tax bracket. And as I look at this interface of the owner tax bracket, you'll notice here on the far left, you have all of the federal tax brackets for each one of the filing statuses. That's single, head of household, married filing jointly, and married filing separately. Now you look over here, more in the central part, you have gross income, owner-occupied deductions, and additional taxes, where you'll find a number of green-colored cells for inputs. Now, if we made the inputs in this, we will actually see what our tax rate is. And let's just run through it real quickly. Let's say we get paid $2,000 in bonuses each year. Let's say we run a business, we get $5,000 from that every year. Let's say our salary is $60,000 from the company we work for. Portfolio income, let's say, is $500, and there's no other income that comes in. Now for owner-occupied deductions, let's say we don't have any money in a retirement plan. Let's say the mileage is $1,000 we're able to deduct from our driving with our business. Business expenses, let's say, is $2,000. Charities, $2,000. Let's say we're not even able to get a standard deduction. And then over here you have additional taxes. You can populate that depending on your case as well. Now, what these values will do will drive all of these federal tax brackets for each one of the specific filing statuses. All you need to do is look at which filing status you would be in and then look what the tax rate is. Let's say you're single. So we have here a 32.8% tax rate. We simply go back to the owner-occupied tab and put that value in, 32.8. Enter. Okay, so now we have our specific tax rate into the tool. Now that will drive, from all the information we've input at this point, the tax advantages, the tax deductions, depreciation, all those things. And we see here that we have a negative, that's what's indicated by the parentheses, $4,849, which comes out to be $1,590 that will actually be returned to you at the end of the tax year from all the deductions that were able to be accumulated against the income generated on the property. So bottom line, that's how much money is returned back to you from the IRS. Now, looking at here the investment box, we have an ROI, return on investment, of 24.61%. That's pretty attractive. We also have here the capitalization rate, which is the net income earned on the property for a given year divided by the amount of money that you spent on the property, which in this case was $175,000. Now, bottom line, we see here gross income and net income, but we also notice here a realized net income. Now you might ask, Nathan, what's the difference between the net income and the realized net income? The realized net income accounts for that savings up here. So the tool, again, is accounting for this money that is bettering your financial situation because now you own your own property. And therefore, that does need to be accounted for into your personal finances. So, bottom line, we see here that you are able to save $4,474 a year, which is about $373 a month. So that's actually the change in your personal finances through the acquisition of this property, which if you look here at the break-even time, which actually is quite attractive, is 48.8 months. What that is saying is, through this income, in 4 years, you're able to pay off the total amount of money that you came in with the closing of this property, which was $28,865. Well, that runs through a case using the Owner Occupy tab in the full pet version. You may have already recognized how this process and the capabilities of the pet tool will make the process of evaluating property much simpler. Fear, anger, and emotional stress will no longer dominate you with the use of the tool. Bottom line, you will have an edge that few people have, and therefore providing you an advantage, making your real estate investment purchase easy, stress-free, and perhaps even fun. On the next video, I will cover about the amortization and how it drives the mortgage. The amortization schedule is the information that the banks and lenders use to visually see the breakdown of your loan. Now you can see it too and understand it. In addition, a very powerful capability of the pet tool that we will learn is how to toggle the purchase price that we intend to offer the seller, or bank if it's a foreclosure. This will permit you to pinpoint the best price to offer for specific financial goals you and your family plan to target. I do want to call you to one action to email this video to 2 people. Maybe you know 2 friends, coworkers, family members, or church members that have an ambition to get involved in the real estate industry, but are bound by their own fears because of a lack in direction to get started or fear the assurance of their endeavor to be profitable. Pass this along as they could benefit from the pet tool. And don't make the choice for them by deciding not to send it. Let them decide. I'm sure they'll appreciate it. Okay, well that was a large dose about the full pet version. Like I said, we will cover in more detail some more specific features about the full pet version and how it will give you an edge few people have when it comes to buying a family home, purchase rental property, or flipping property. I know this video was a bit long as I explored more thoroughly the details of the tool. Stay tuned for video number 4, and I promise it will be shorter as we've really got the basis of how the full pet version is designed. Okay, with that said, take care, have a great day.